Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries behind those boring corporate filings. And today we're diving into State Street Corporation's latest report. Get ready because we're about to find out if this financial giant is sailing smoothly or hitting some choppy waters. Also, before we dive into the numbers, make sure you are subscribed to the channel for more insights like this, and join our Discord community linked in the description for some lively discussions. Alright, let's get straight to it. State Street, a big name in the financial world, has just dropped its report for the period ending the 16th of January 2026. Now, when companies release these reports, it is often about how they're doing financially, especially their results of operations and overall financial condition. Think of it as their financial checkup. What is particularly interesting here is the mention of different types of stock. We're talking about their common stock, which is what most people think of when they invest in a company, and also their preferred stock. This preferred stock comes in different series, like Series G, and it represents a special kind of ownership. It is like having a different class of shares with its own set of rules and benefits. This is important because it can affect how much money a company has available to pay back its investors. The main event for today's filing and what we really want to unpack are the results of operations for the fourth quarter and the full year of 2025. State Street put out a news release announcing these results, and they've also shared a financial information addendum and a slide presentation that gives us the highlights. These aren't just numbers on a page, they tell a story about how well the company has been performing. We're going to look at the key figures from these documents. So what did they tell us in this news release? Well, it is all about their performance, especially looking back at the final stretch of 2025 and the entire year. Companies like State Street make their money through various services like investment servicing, investment management, and investment research. The results would show how much they earned from these activities and what it cost them to run the business. Were they bringing in more money than they were spending? That is the fundamental question. Now, let's zoom in on some of the numbers that really matter. When we look at financial information addendums, we're searching for trends. Are revenues growing? Are expenses under control? For a company like State Street, key metrics would include things like total revenue, which is the total money they brought in. Then there is net income, which is what is left after all expenses are paid. We also want to see how their assets and liabilities are doing. Are they taking on too much debt, or are they in a strong financial position? The slide presentation is often designed to make these numbers easier to digest. They might show year-over-year comparisons, meaning how this period compares to the same period last year. If revenues went up by, say, 10%, that is great. But if expenses went up by 20%, then you might have a problem. If State Street reported a significant increase in assets under custody and administration, that suggests clients are trusting them with more money, which is a very positive sign for fee-based revenue. Also, looking at fee revenue specifically is crucial. This tells us how much they are earning from their core services rather than from trading or other more volatile income sources. If fee revenue is growing, it often signals a more stable and predictable business model. And who signed off on this? Elizabeth M. Schaefer, Senior Vice President, Chief Accounting Officer, and Interim Controller. This signature means that the company's top accounting officials have reviewed and verified the information presented in this report. It adds a layer of official confirmation to the financial data. This is typically done on the 16th of January 2026, underscoring the timeliness of the reporting. Analyzing State Street's filings often involves looking at their management's commentary. What are they saying about the economic environment? How do they see their business performing in the near future? Are there any new strategies they're implementing to boost growth or manage risks? For instance, if they talk about expanding into new markets or launching new products, that is a strategic move we want to pay attention to. It shows they're not standing still. We also need to consider the broader economic picture. Is the market generally strong? Or are there headwinds like inflation or rising interest rates that could impact a financial services company like State Street? Competitors like BlackRock and BNI Mellon are also constantly innovating, so State Street needs to stay competitive too. Looking at this report, State Street appears to be navigating the financial landscape with a focus on its core services. The emphasis on results of operations and financial condition, along with the accompanying presentations, signifies a commitment to transparency with investors. While we don't have the exact figures here to perform a deep dive into specific percentages and real-world impacts. The structure of the filing indicates they are providing updates on their revenue streams and overall financial health. This provides a window into their business strategy and how they are positioning themselves against competitors and within the prevailing economic conditions. The fact that they are presenting results for both the quarter and the full year gives us a good perspective on their performance trends. In conclusion, State Street's filing is a snapshot of its performance and financial standing. It highlights their efforts to communicate their operational results to the investing public. The key takeaway is to always look for the story behind the numbers, understanding what drives their revenue and how they manage their costs and risks. That is our breakdown of State Street's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.